Bitcoin, the force revolutionizing finance, offers a decentralized, transparent, and secure alternative to traditional banking. As adoption grows, its limited supply could push prices higher. However, this potential depends on preserving its decentralization. If centralization takes hold, Bitcoin's unique value could be at risk. To secure its future and fully realize its potential, we must fiercely protect its core principle of decentralization. Podcaster Walker recently spoke with Jeff Booth about the decentralized and secure nature of Bitcoin. Jeff Booth shared his insights on how Bitcoin could change the economic landscape and how crucial it is to maintain self-custody and guard against centralization threats. Booth stressed that people are aware of the importance of Bitcoin's decentralization and security. He claimed that they are alert about threats, especially at Layer 2, where attacks may have an effect on Layer 1. He said that for 15 years, Bitcoin's Layer 1 has been secure and decentralized, and it has only gotten more so over time. Watch clips from the interview for further insights into Jeff Booth's conversation with Walker. Please like this video, subscribe to the channel, and turn on post notifications for more contents like this. Enjoy the video.
And then we have a new protocol bounded by energy, open, decentralized, and secure protocol bounded by energy, Bitcoin, which imposes the free market, which for the first time in history you couldn't cheat that. So it imposes all prices relative to Bitcoin falling forever to the marginal cost of production. And every new person that's moving their time into that system is adding their intelligence, ideas, acceleration to the free market, which is prices in Bitcoin will tend towards the marginal cost of production, or prices forever will fall against Bitcoin. That's what it would look like. And I say, if it stays decentralized and secure. If those things are true, we've never had it, then it's also true that we've always measured a system by the system, and we're inside that system measuring the system. And it's also true that we couldn't measure Bitcoin because there's nothing to measure it against yet. Or you can measure other things against it, prices falling, and you'd see all prices fall, energy prices fall, house prices fall, all prices fall, according to Bitcoin, which you would expect to happen. But now go back to, if in 5,000 years we've never had a currency that has resisted that manipulation, then we must be one of the things, all of us must be part of the equation that allows the centralization. Because there are lots of smart people in 5,000 years of human history that knew the same things we're talking about now, and all currencies have always been centralized. You'd have to have a really high bar on the attacks that were going to come to Bitcoin, like a staggeringly high bar on why it would likely be centralized, and what would happen to be able to centralize it, because most people fall into the trap throughout history of pricing in whatever currency they're in and allowing that centralization, essentially making trade-offs, short-term trade-offs versus long-term. And if we've never gotten out of it before, what's to think that we would this time? So that's the high bar that I think of Bitcoin. And so Bitcoin Layer 1 being decentralized and secure for now 15 years, and getting more secure, more decentralized. I'm not saying that there aren't still some risks there. I'm not saying mining pools, but I think enough people understand what this means for humanity. And what they're doing is constantly vigilantly looking for risks, and rectifying and becoming, that's kind of in Bitcoin maxi terms, that's what you're doing, right? You're vigilant for attack vectors, and you're constantly looking for attack vectors, because once you're out of this crazy matrix, and you also know what the high importance of decentralizing security for humankind going forward. Probably 2-3 years ago, I said, okay, if I knew everything I know, and there's lots of smart people around. They must know everything too. And you lost layer one. You couldn't choke off layer one. You couldn't stop it. It kept on going. How would you stop Bitcoin at layer two and then use layer two to attack layer one? And I think we're really early in the path of that actually happening.
Jeff Booth highlighted Bitcoin's unique qualities, crafted by Satoshi through mining and proof of work, which allowed it to achieve escape velocity while maintaining decentralization and security. Booth believes it will stay this way because key figures like Matt Odell recognize its importance and actively work to prevent centralization, developing defenses like the Ocean Protocol. Booth also noted that Bitcoin, like gold, must be a medium of trade to succeed as a store of value. If Bitcoin is only seen as a store of value, it risks becoming fractionalized and centralized, much like the US dollar, potentially leading to self-custody issues. This shift could diminish Bitcoin's unique attributes and affect its price potential. Protecting its decentralized nature is crucial to ensuring Bitcoin's value continues to rise. Meanwhile, Ethereum, the second largest cryptocurrency by market capitalization, recently saw its gas fees plummet to a 5-year low, marking a significant event in the crypto space. Gas fees, which represent the cost users pay to perform transactions on the Ethereum network, dropped over 95% from their March peak of 83.1 gigawei. Earlier this week, fees dipped as low as 0.6 gigawei, with low-priority transactions costing 1 gigawei or less, a rare occurrence in recent years. This dramatic decrease in gas fees can be attributed to several factors. One of the primary reasons is the migration of users and decentralized applications, dApps, to other blockchains that offer faster and cheaper transactions, such as Solana and Layer 2 solutions. Additionally, the long-anticipated Denkun upgrade to the Ethereum network improved its efficiency, contributing to the reduction in gas fees. The Denkun update, which consists of 2 major changes implemented in March, altered how transactions are processed and validated on the Ethereum network, leading to more streamlined operations and lower costs for users. Ryan Lee from Bitsgap Research highlights a historical link between low Ethereum gas fees and subsequent price increases for Ethereum. He notes that when fees drop significantly, it often signals a price bottom, with strong rebounds typically following, especially during favorable economic conditions like interest rate cuts. Recently, lower fees have reduced the amount of Ethereum burned, leading to an increase in total supply. Over the past few days, nearly 16,000 ETH, worth about $42 million, was added, suggesting Ethereum's supply could grow by approximately 0.7% this year. Despite this slight increase in supply, the lower gas fees are generally viewed as a bullish signal for Ethereum. If historical patterns hold true, the recent drop could indicate an imminent price surge for Ethereum, making this a potentially opportune moment for investors and traders to watch the market closely. As the network continues to evolve and adapt, Ethereum's ability to maintain low fees while supporting high levels of activity will be crucial in determining its future price trajectory. What's the key to keeping Bitcoin secure and decentralized, while also considering Ethereum's evolving role in the crypto space? How can we protect both from centralization threats and attacks? Drop your thoughts in the comments below, like this video, and subscribe for more updates on Bitcoin and Ethereum. Thanks for watching and stay tuned.